Here we are, MMTs. It's a Friday, and we got a major 1,300 put short that we were showing everyone yesterday in the S&P 500. And here are the contracts once again. And that was that 1,300 put option that we were looking at getting, but we got a big gap below the market. So we only took a few of those. But the thing about it is we're going to have to start looking at where the failure is. And I'm going to also load up some other put options in here that the Dow is at 1278. And what I'm going to do later with the MMTs is put that 1280 put in there on this first drawdown and this first pullback in the daily S&P 500. Now, having said all of that, MMTs, let's take a look at the reversal. And how do most markets have a reversal from being overbought? We've been telling people that for the last month in January, that whatever day it would come, that it would come. And once it got here, was that bull going to come back in and do reversals? They did it on the last one a week ago during the earnings season. Not this week, but the prior week we had a pullback here in the S&P off of that top. We pulled back, but then like I said, the bulls came back and made another high to that 1,300 kiss goodbye with the gap down. And that gap down just so happens to be right here at this teeny line where you had the big breakout to that reversal, which was a 2-day reversal. But then the bulls came right back in, just like we said that we would monitor. So that you would come out of the short, which we did, was a short-term short on the index. Now, this one has got a positive daily bar. Even though that the S&P 500 is down 20.48 handles, you can see where the green is there and not the red. But when you take a look at the 1,300 kiss goodbye down to the low of this bar, let's go to the brain and let's see. The low was 1276.1302 is what I was talking about yesterday. It puts in the high yesterday. The kiss goodbye was on the opening bell in the pre-market futures gap. They opened it at 1299 was the opening tape, and then down she went on the S&P. So basically what we're going to be doing here is we're going to monitor, just like when we had this major reversal a week ago, that they came back in 1 day, 2 day, 3 day, 4 day, 5 day to the top with a big gap down. And you're right back here where that last trend started, MMTs. The thing about it is if the bulls aren't going to step in, we've been short all day. Rather, if it's just a 1-day wonder, so what? Or is it going to be many more days? We'll find out, because Pinky in the brain is going to tell us exactly what the strength is on this daily chart. This daily info panel down here, we are closing 18.76 handles below the previous half bar. That means negative 18.89 movement means that this whole bounce, even if we do get a bounce, is going to be very weak. Go back up and roll over Beethoven. S&P 500 kiss goodbye at 13 with a 1276.22 low, and we can see some evidence that the bulls going in there late in the day. We're going to see if they come back in the last hour. If they want to own equities, we'll get long the high beta off the bottom, take our gains, get out, and just do what we do every day, and that's directional price movement. Nothing else matters. S&P very weak. Time 11 o'clock a.m. Pacific Standard Time. Date 1/28/2011. Reversal 1. Gap down reversal 2 on this. Reversal 1 MMTs. We called that top. Gap down. Bull came back in. Gap down. Bull and bear struggle. Either the bulls power or the bears take it over. One of the two things are going to happen. A kiss up before the next kiss goodbye. But somewhere there's going to be a bigger move made within reversal 1 and gap down 2 to make that whole top up here a double reversal with a blow off high with a gap down.